Hello everybody and welcome to this now regular video where I present my favorite stocks, my best 10 stocks as I call it, and these are the top positions in my portfolio. And if you've seen this video, it's largely the same video that I've done before, but I do these videos to reach out more people on YouTube. So if it's your first time watching, thank you so much and welcome to the channel. If you've watched it again, feel free to pause right here and look at my valuation. They are the updated valuation as of today, Sunday, July 9th, 2023. These are my top 10 stocks, and you can see my ranking in there. And I have what I call my tier 1 stocks. The tier 1 stocks that I like to call is Tesla and Enphase. I really like those two companies in the energy revolution space. Microstrategy is my proxy for Bitcoin, but one could look at just Bitcoin. And then I have a lot of plays that I like, some safer than others. You know, I would consider MercadoLibre, Airbnb, Crowdstrike to be very safer plays. I would consider HIMS, Palantir, maybe Nubank, StoneCo to be a little riskier plays, partially because they have a higher share of retail ownership, and some of those stocks are also less owned by traditional investors. They're more retail oriented. But anyways, I have my ranking right here, and you can see when I have all of the stocks ranked as 5, for example, it means it's roughly the same size in the portfolio. So anyways, these are my favorite stocks. But if you're new to the channel, let me tell you a little bit about my style of investing. So how do I invest? Or rather, why did I pick hypergrowth? Why do I invest in hypergrowth stocks? I call the hypergrowth stocks in this spreadsheet hypergrowth because over the next 12 months, revenue growth is expected to be well over 30%, actually 44% on average across all 10 stocks if you were to equally weight them. And this is very high revenue growth. And the reason why I have to seek such hyper growth is because in my world, 15% nominal returns is not enough, because in my world, a 15% nominal return would actually be a 0% real return. And I really want to achieve a 15% real return. And so in order to achieve a 15% real return, I have to at least get a 30% nominal return, i.e. a 30% growth, revenue growth in dollars. And the reason why I talk about revenue growth so much is because from a theoretical standpoint, if the price to sales ratio applied to a stock does not move, sales growing at 30% should equal to a price of the stock growing at 30%. That's very theoretical, and price ratios, price to sales ratios change all the time. But over the long run, it's fair to say that the market grants a certain range on a price to sales basis for each stock. And so if revenue grows, if sales grow, then the ratio will equally grow in the price, right? The nominator on that ratio will grow. And quickly, the reason why I'm so gung-ho about having such a high return is because I want 15% because the wealth is getting diluted. That's why I named the channel Beat the Denominator. It's the whole idea that the money stock is growing really fast. And if you have 15% new dollars issued each year, a company that has grown at 15% is only staying afloat. I consider companies whose growth is 15% to only be staying afloat. And that's why if you go back over the long run and look at the returns of, for example, the S&P 500, and you compare it to money supply and you compare it to money stock, you can see that it has barely moved. And again, don't be fooled, and this is important for me to say that, but don't be fooled whenever you look about M2. A lot of people talk about M2, and M2 is a good metric, although it's the best estimate of how much US dollars are out there, right? How much currency in USD is out there. The truth is, it's much bigger than M2 money stock, because you have euro dollars, and euro dollars are very opaque. Very, very opaque. But if you look at the estimate, if you go to read the academic research, you know that there's at least as many euro dollars out there than there are M2 money stocks, if not more. And it's important to note that euro dollars are dollars held abroad, but they make their way back to the US economy and vice versa, right? M2 money stock makes its way in the euro dollar market. So the fact that so many dollars are held abroad, the fact that the money stock is not stable, and it's growing really, really, really fast and literally never decreasing, right? It's decreasing if you just look at the M2 money stock for about over the past few months, but otherwise it's never decreasing, means that in my view, I have to look for stocks that at least beat 15% return, 15% growth in their sales. And the only way to do that, what's the only way to do that, is innovation. Innovation is the only way to do that. I have no choice but to look at innovation. Sales are a proxy for product adoption and product innovation. And when you look for 30% growth, if you want to be able to find a stock that's going to compound at 30%, the only way to find a stock that will compound sales at 30% for, say, 10 years is to find a stock that is highly innovative, and that's my style of investing. And in my Friday videos, I also talk about this style of investing. My style of investing is I try to invest in a stock before it gets adopted, like right at the moment where it is clear that that stock is going to be a big deal. That company, their product is going to get adopted. And if you look at and that's the only way. That's the only way you're going to get that 30%. You're going to get that S curve. The beginning of that S curve is exponential. That's why when you look at all sorts of high growth investing, when you look at books like 0 to 1, that the early days of a stock are exponential. They see exponential growth. They see growth at a constant rate that is very, very high. And the whole idea is, for example, I always take the example of Tesla, but Tesla's not the only one out here. But Tesla adoption, if you look at the US, Tesla's adoption is 4%. Electric cars as a whole in the US are 6% adoption. So we are right here, and we've crossed the chasm, as we'd say. If you have about 4 to 6%, 6% as a whole, electric cars have been adopted, it's going to be a thing. You're past that risk. You're past the liability of newness. You're past the early days, and you're at a point where you're catching the product right before it grows. And at least that's the idea. And all of the stock that I have in this spreadsheet are examples of innovations that I'm trying to catch right before they become big. And that's also why I focus on early on metrics. Like if you look at all the metrics in that spreadsheet, I focus on gross profit, forward gross profit. Most of these stocks are only optimized for gross profits. And sometimes you could argue some of them are not optimized for gross profits. Some of them you could say they have a gross profit, but it could be bigger. They're really just optimized for gross profit because these are companies that invest back heavily into their growth. They invest back heavily into either marketing or R&D. And of course, that also means they're not going to have earnings, because they're going to reinvest. But what I usually say is that by the time price to earnings ratios start to matter, I will likely be out of the stock, because look at Apple. Apple's making a bunch of money right now, but everybody has an iPhone. It's a big assumption to make, to think that Apple is going to grow sales at 30% for the next 10 years. As much as I love Apple, I don't think it's going to happen. But if you look at Tesla, we have a promise from Tesla. Elon Musk has repeated over and over and over again that the delivery of vehicles over a very long run will be up 50% each year of vehicle deliveries, and all of the other projects, all of the other mega packs, mega chargers, all these other projects that Tesla has is growing at triple digits. It's not growing at double 50% digits, which is why I think 50% revenue growth for a foreseeable future, say 10 years, I think is conservative, at least conservative per my style of investing. It's also important to remember, and this is the last time I'll talk about this because I know macro is not popular, but as the acceleration of money printing increases, right? I mean, I know we don't see it in the statistics, but it's definitely happening. If you look at the BTFP program and the bond funding program and all of that, as more money stock is being let out, as money stock grows, it's going to be easier for companies to reach their numbers, because companies will increase their prices as there is more money stock in the economy and more money flow. So let me begin my analysis with Tesla. I will begin with Tesla. So, briefly, why do I invest in Tesla? Why Tesla? Well, I invest in Tesla because electric cars are revolution. Electric is revolutioning cars. You are moving into a world where you have appliances. Cars have barely changed, in the past 70 years. It's an engine, it's wheels, it's oil changes, even the nomenclature around wheels, around cylinders. It's the same thing. Cars are big appliances. The innovation has been incremental. And what do we mean by incremental innovation? Is a car from today is going to be like 10%, a nice car is going to be 10% better than a car from last year. That's incremental innovation. When a car is just 10% better than last year, that's not going to push people to make the switch. In the case of Teslas and electric cars, they are at least 10x better. And 10x is an understatement in my view. You charge them at home, you avoid the gas station, right? The autonomy of these cars, and I'm one of the few people who believes that, per my analysis, but the autonomy of this car, the range of these cars eventually will exceed that of gas cars eventually. So that's another major win. It's much cheaper, right? If you calculate on a kilowatt hour basis, you're going to be at well under $10 to fuel 500 kilometers, 400 miles of range. You're going to be at well under $10 to fuel that. Try to achieve that low cost with gas cars. It's almost not impossible. They last much longer. They have fewer moving parts. If you follow anything that has to do with engineering, we know that moving parts and vibration is the main thing that causes appliances to break, and of course electric cars have very few moving parts. Tesla is the epitome of 10x improvements. 10x is what we call an order of magnitude in the real world, and how many orders of magnitude does one get once they buy the product? This product, I believe, is winning. It's overwhelmingly winning. There's countries where it's out of stock, for example, like Australia, beginning to be out of stock in the US. I am in Europe right now. I see them everywhere. I see them, I'm in southern France. I see them more in south of France. Teslas, Model 3 and Model Ys. I see them more than I see them in Texas, where I live. And I thought the amount of Teslas I see in Texas, I thought was crazy. And I see them more here, where, VAT is through the roof, and cost of living is through the roof, and, cost of cars is way higher. I see them more. So what does that tell you? Well, that tells you that there is adoption going on. We're past the 5% adoption threshold in most countries. Some countries are well over 50%, especially in Northern Europe. Tesla is the uncontested leader. Market share is not budging at between 65 and 70%, whatever you look at. It's not budging that market share. And so will we get a situation one day, I don't know, 15 years from now, if we talk about Tesla again, will we have a duopoly? Maybe. Maybe we'll have a duopoly. We'll have Tesla running the Tesla software, and we'll have some other software and all of the competition running some other software, just like Android and Apple. And of course, cars are becoming consumer electronics. They are not appliances anymore. They are consumer electronics. Really quickly, if you look at the performance of Tesla, this is not cherry-picked data, by the way. This is the performance would be actually even better if I were to run it. I ran this 2 weeks ago. If I were to run it again, performance would be even better. If you look at the performance, NASDAQ, past 10 years, you're at 18%. Tesla, you're at 53%. Why? Because the product is getting adopted. This company has forced literally the second largest consumer household industry out there to make a switch and make a move, and it is the leader. So let me move on. There's a lot of content on Tesla out there, so I can't talk too much about Tesla. Let me talk about Enphase. There's less content on Enphase. Enphase, I've made a full video, an hour and a half, explaining my full thesis on Enphase. Enphase is what I call my tier 2, my tier 1 stock, my second tier 1 stock. It's a stock I'm very confident in. I've been on and off into solar for a long time. I love solar. I think it's a great industry because it follows the main basics, like the same basics, for example, no moving parts. That's a basic that solar follows. This energy is just first principle thinking, incarnate. I mean, it's really all about first principle thinking. You just capture energy straight from the fusion in the sky. You just use the sun to excite electrons on a piece of silicon, and you don't go through all of the convoluted ways that we have today of making energy, like having a turbine. If you have a turbine, you have all sorts of maintenance, right? Wind energy doesn't last nearly as long as solar energy. Solar panels that were set up in the 80s, they're still around. They're still making, 50, 60% of what they used to make. They're still doing very well. So anyways, residential solar is taking off. That is the takeaway here. If you look at the adoption, it's 4% adoption in the US. Drive in a neighborhood in the US, you'll see about 4% of homes with solar on their roofs. Drive in a neighborhood in Europe, you'll see about 10%. And I can confirm those 10%. This is definitely what I see, if not a little more in sunnier parts of Europe. I would argue. Enphase and SolarEdge, they're the duopoly, they're the leader, they're the best. It's pretty much going to be a duopoly going forward. I do believe Enphase has the technically superior solution with micro inverters. That is just my take. That is a debate. And if you watch my full video on Enphase, an hour and a half, where I talk about microinverters versus string inverters, it's a matter of you, the investor, deciding which you think is the best technology. And by all means, if you think SolarEdge and string inverters are a better technology, take a look at SolarEdge. I believe both companies are in a position to win because they have a networks of installers. Even the best do-it-yourselfer, even the best do-it-yourselfer will typically have going on the roof as a limit. Like you may wire electricity in a room and have no problem doing that and be perfectly comfortable changing a breaker, adding a breaker. But if you have a family, you're not going to want to get on that roof. And that creates a moat for these companies, even though I typically don't like moats in general. That creates a moat for the solar installer networks because most people don't want to get on their roofs. Anyways, let me move on to my third pick. Now, my third pick is what? It's HIMS. So HIMS, why do I like HIMS? I like HIMS because they have a very quick adoption of their products. They're focusing on stigmatized healthcare conditions, things like hair loss, like ED. And when I say stigmatized, I mean historically stigmatized by the traditional healthcare system. Try to go see your traditional health insurance and tell them that you feel awful because you're losing your hair. They will tell you it's just the way of the world. You're losing your hair, and even though it may be very crucial to your health for you to keep your hair because you enter into depression, anxiety, stress, you don't want to go out. I mean, it's tragic stuff. And really, the insurance system is all about telling you what's healthcare and what's not healthcare, what's covered, what's not covered. My assumption for the future for a company like HIMS and its competitors to a lesser extent, even though I don't see too many credible competitors. At least I don't see a lot of competitors that have the holistic approach of HIMS to healthcare. But my assumption is that a lot of people are going to be like, you know what, my healthcare, I'm going to pay out of pocket and I'm going to get comfortable just getting minor issues treated. And instead of waiting, 6 months to see a specialist because I have to find a family practitioner, then I have to have an appointment with them, then I have to get a referral, then I have to get the other one. All of this for all in all getting reimbursed a few $100. I think a lot of people are going to be like, you know what, let me take care of my solution today, right now. Let me wait 48 hours, and in 48 hours I can see a specialist, and the specialist can tell me, yeah, this is good, you qualify for this, I can prescribe you this, I feel like you have this issue. Or they can tell you no, and you can just not buy anything and be happy that the specialist tells you don't have the issue. So I think people are going to be willing to pay outside of their pocket. And healthcare cannot disrupt itself from the inside. It's not possible. So there's too many players that are entrenched, relying on modes to not innovate much. And of course, the disruption, I think, needs to come to the outside. HIMS, smaller company that a lot of people were kind of dismissing in the beginning because of their focus on ED products, but I don't think this is a company to be dismissed. I think this is a very powerful company, and I'm very happy to own HIMS. I've done a full 1 hour analysis on HIMS as well that you can find on the channel, where I go into depth as to why I like HIMS and her. So they have two sides of the company, right? It's not just men anymore. But moving on now to Palantir. So I like Palantir very much. What I like about Palantir is the CEO. You got to know that the CEO is part of a PayPal mafia, right? It's a friend of Peter Thiel. Peter Thiel founded Palantir with the CEO, Alex Karp. PayPal mafia understands a lot about orders of magnitude about its innovation, about creating a new product, not just an improvement on a data warehouse, but really creating something entirely new. And this is what Palantir has done. Palantir has created something entirely new that is resonating in the military world, and it's resonating in the military /AI world very well. It's a leader in the West. I believe this company has the potential to be a leading military contractor. We have the big three military contractors today. I believe we could have the big four, and Palantir could be one of those big four. And so I invest in Palantir mostly for the military business. Foundry is a great product. I believe I have scratched the surface of understanding Foundry, but a lot of CIOs right now are just not willing to spend millions of dollars up front for a product that they can't really try, and where a community doesn't really exist much at this point. So I think Foundry, even though they may succeed, it's still a riskier bet that I'm willing to take. But I'm willing to take that risky bet with Foundry because of Gotham, because of military software. If you look at the numbers, I've analyzed Palantir's numbers for their last quarter. The military business is actually growing just a tad more than the Foundry, the commercial business. Their military business is still growing a little more than their commercial business. So this is telling you something. I mean, I think this is telling me something, but they have a product that is special for the military, and it's very hard to deny that. When it comes to competing against Snowflake, and Snowflake trying to offer data apps just like Palantir, we'll have to wait and see, but you get that option of Foundry while simply wanting to invest in the military software, which is why I like Palantir very much. And I like that the CEO actually went on the record and guided us 30% growth over the next decade. And they're way down for now from that goal. They're down. They're not achieving that goal. We'll have to see if we get those years that are 50% plus that catch up the down year that we've had with the events of 2022, as I'm going to call them, the crazy rate hikes that we've had. Let me move on to Crowdstrike. I like Crowdstrike very much. Crowdstrike is an AI-fed endpoint security system. That is, it's an antivirus. It relies on having the largest network of computers with its software installed. Whenever a antivirus, sorry to use an old word, but it speaks to me when I hear the word antivirus, even though it's not exactly the same thing. Of course, it's not exactly the same thing, but anyways, whenever there's a breach on a laptop somewhere, a computer somewhere has a breach, and they have Crowdstrike installed, that breach gets to the network of Crowdstrike, and the AI analyzes the breach and communicates to every single other laptop that uses Crowdstrike that, hey, there's a breach somewhere at some other computer that you've never heard of. There's been a breach, and the software updates. It's AI driven, and that's why I believe they're going to win, because they have the most data. If you have an AI driven, attack striking system, you need to have the largest network. The largest network tends to win, right? It's just like language. If you look at language, English is the winning language because it is the largest network. It makes most sense to learn English for most people because most people speak English. So the first language you're going to think of learning if you're not native is going to be English. I think it's the same thing for companies. Companies, if they're looking into endpoint security, into an antivirus, pardon me for using that old word, if they're looking for an antivirus, they're going to go for the one that is the most owned or most spoken by the world. And that's the value of network effect for Crowdstrike, which I find really strong. The CEO gave impressive guidance, 5 billion ARR 3 years out. So, and we are at 2.4 billion right now. So that would equal to about 35% growth over the next 3 years, which is amazing. So I'm very happy to own Crowdstrike. Let me move on to MercadoLibre. MercadoLibre, I view as buying Amazon or Alibaba in 2007. They're a leader in e-commerce in Latin America. Their penetration in Latin America is very good, but it's still nowhere near what we have in the West, especially if you live in the US and Europe too. I mean, if you live in the West in general, penetration is very strong. Not as strong as Asia, surprisingly, but it's very strong. But not in Latin America. Latin America still relies on a lot of small business, and there is a winner in e-commerce, and that is MercadoLibre. They've been winning for more than 20 years. Sorry, the company's founder leading in Brazil, leading in Mexico, leading in Argentina. They've had an amazing way to grow in Argentina despite that inflation. You have inflation in Argentina that's about 100%. MercadoLibre is going at 150% in Argentinian pesos. So it's very impressive, and it's tough to find a ding against that company. They have a powerful advertising business that they're launching. You get a fintech with MercadoLibre, a leading fintech in Latin America. So, and if you look at the growth, they've been doing very well. The stock has been crashing a little bit, but if you look at it, you're at 27%, right? Since 2010, you are at 27% average annual growth for a stock like MercadoLibre with the current discount if you were to buy the stock today. So that's a 27% ARR over the past 13 years. And before the crash, that was 35%. And they're estimated to go at 45% again over the next 12 months, which is amazing. And I love MercadoLibre very much. Wish I could use the product, but they're not in the US, so I can't really use it. As far as StoneCo is a similar story to Square and to what Square did in 2014 in the US. And if you're in Europe, like I said, I'm in Europe right now, they have similar systems to Square. I can't remember the names, but they have a few startups that do the exact same thing, which is, paying on your phone. And when I go around France, I see I can't remember the name, but there's two of them that are clearly leaders and that caught the market. Clearly. There's two players. I'm sure you go to any country in Europe, you're going to see a few players that won. In Brazil, who won? Well, in my view, in Brazil, StoneCo and PagSeguro have won. If you go to a small business in Brazil, that will be StoneCo or PagSeguro. And that you may ask, well, why would I buy StoneCo, and why wouldn't I buy, say, the leader in Europe in that space? And the reason for that is the valuation. If you look at the valuation of StoneCo, I mean, this is a company that's trading enterprise value over gross profit of StoneCo is a 2. Over forward gross profit is a 1.76. I mean, you're paying. I'm very happy to own StoneCo because that growth is very, very, very dirt cheap. This is a stock that has fallen from its highs in 2021 because they had an issue with the collateral recording setup, and the stock has not rebounded, despite the fact that the revenue growth there, the innovations there, the cultural relevance of that company is there. And I believe they will rebound at some point, and so I'm very, very happy to own StoneCo. It's a stock that, if it rebounds, my view is if it rebounds, I have a hard time to see how it couldn't get back to above $100, and the stock is $13 now. I don't see why it couldn't get back above $100, and then we'll have to see and compare when that's the situation. But right now, this is a forgotten stock. This is a forgotten company, right? I mean, I don't understand why it's so cheap. Not investment advice, by the way. None of this is investment advice. This is just entertainment. I'm trying to entertain you all. Moving on to Nubank. Talking about Nubank. So Nubank is a neobank in Latin America. They have little competition right now, and really, the legacy banks, they're not really giving them a run for their money. The legacy banks, they need to pick up. They need to do a better job. I don't think they're doing that good of a job from what I can see from the US, right? From abroad. Like I said, I don't live there, but if you ever watch sporting events, you'll see a Nubank, plastered on the walls everywhere. It's a very culturally relevant company, it seems, in a lot of Latin America countries, including Brazil, including Mexico. One question quickly, and I'll briefly talk about this, but why choose Nubank over SoFi? Well, again, the student loan overhang. I haven't liked the student loan overhang for SoFi over the past year, and I guess I've been more vocal about it over the past few months. This overhang is again a thing. I mean, if you see, we saw in the news a few days back. I haven't made a video about it because I'm very busy with family, but if you'll see a few days back, they've announced that there's no penalty now until 2024, until September of 2024. There is no penalty if you don't start paying back. So it moved from the payback is for sure happening in September of 2023 to, the payback is happening, but if you don't pay back, it's kind of a forbearance. So, and of course, September 2024, what do we have in the US? We have an election, and so you might have a bunch of people that have not started paying back on those loans. Like I said, that student loan overhang, I mean, it's a real thing in my view, that student loan overhang, and I can't forget about DACA, and DACA is still here. If you remember, deferred childhood arrivals action from like the 2012 era from the Obama, it's still here. So I know a lot of people owning SoFi stock are screaming victory on the student loans, but look at this piece of news. I might put it in the comment section. Look at this piece of news on the student loans. Yes, they are coming back, but it seems like if you don't start paying back, you'll accumulate interest, and there won't be any consequences. And of course, if there is no consequences to waiting, I believe a lot of people will decide to wait. At least that's my view. So that's why I prefer Nubank, and I've increased my position in Nubank substantially. And SoFi therefore is a smaller position for me now. Still love SoFi very much. I just wish SoFi at this point. I just wish the market stopped considering it and trading it like a student loan company. Please, I would like the market. If you look at the correlation between SoFi and Navient, it's really uncanny. It's like a 0.85, that correlation. It's like literally the same chart. Anyways, I'm not a chartist. You're right. Over the long run, I love the company over the long run. But that overhang right now is annoying me. It's just annoying me. That's just me. I mean, I may be wrong. I hope I'm wrong, because I own SoFi stock. So I really hope I'm wrong. Moving on to Airbnb. Why do I love Airbnb? Because hotels have never ever been disrupted, and it is now time for hotels to be disrupted. Airbnb is a two-sided platform. It exploits pre-existing capital that registers on the platform, and of course the customers, right, prospective customers, they log in on the platform. And why do they pick Airbnb? Because Airbnb has the most rooms they can find. They can find most of what they want on Airbnb. Airbnb monetizes trust. Airbnb enables trust between parties, which is something that a lot of a traditional rental business, a lot of traditional vacation rental business doesn't do. I mean, in the olden days, if you were to say rent a vacation home, you wanted to rent a 1-week vacation home somewhere in a beach town, it could happen that it was a scam, and he would send the money to a fake address, and that home didn't exist. Those pictures were fake, etc. With Airbnb, Airbnb is falling under a lot of backlash for a few idiosyncratic examples. But what they're trying to do at their core is to try to create that trust. This is the same story as Uber. This is the same story as eBay. This is even a similar story to what happens with dating sites, right? It's trying to create trust in a world that doesn't have any. And when you create trust, you can engage in transactions and create transactions. And I believe they are resonating with the modern consumer. I think they have explosive growth among millennials, among Gen Z. A lot of the product, a lot of the housing that they sell, right, is induced demand. It's new demand. It's people who wouldn't think of Airbnb. Wouldn't think of going on a vacation if Airbnb didn't exist, right? They have very fascinating company, much more complex company than people think. And of course, in my view, the way I look at it is as the Airbnb as a credible threat over the long run to mom and pop renters of homes. It's like you get started in life, you rent an apartment for 2 years from a family that lives locally. I have a feeling. I mean, I could see this getting disrupted. I really, really could, because the court systems around the world are extremely, extremely slow. And if there is a problem from both sides, whether it's the side of a tenant or the side of a landlord, if there is a problem, there's just not efficacious enforcement. And by having a layer of enforcement, having a third party in the shape of an Airbnb that both parties pay a fee for, you can create that trust and generate value, and value that accrues to Airbnb. Therefore, I love Airbnb very much. I think it's an amazing company, and it grew extremely fast. I dare anybody to find companies that have grown that fast. This is a $73 billion market cap. Obviously, Tesla grew much bigger, but if you look at the handful of companies that reach $50 billion in market cap in, say, about 10 years, there's not a lot. You don't have a lot of companies that reach 50 billion from zero to 50 billion in under 10 years. Very few companies do that. Only companies that accrue and create a lot of value can get to that level of growth, in my humble view. Finishing up with an asset that grew really, really fast for Bitcoin, we're going to call it 15 years, right? Because Bitcoin market cap is what I think it's about 400 billion now, maybe a little more now that it's up. 3 to 400 billion, for something that didn't exist 15 years ago. If you resonate like that, Tesla and Bitcoin are the fastest growing assets. There's no way around it. There's no way around it. These assets grew enormously. And the reason why I own Bitcoin is, and there's, just like Tesla, Bitcoin is an asset that gets a lot of coverage on YouTube, so I don't talk about it as much. But the reason why I like Bitcoin is because it's my bond alternative. When you invest in stocks, you have business risk, right? You have securities fraud risk. You have lawsuits risk. You have whole sorts of risks. Competition risk, of course. Taxation, law. All of these risks exist inherently in any business that you buy. When you buy a business, you buy a lot of risks, and you get compensated for that risk in the form of a return. I believe Bitcoin is an asset that has uncorrelated risks with any of the traditional stocks. What is the biggest risk to Bitcoin, if we're entirely honest? The biggest risk to Bitcoin is the dollar becoming sane. Right? If the dollar becomes sane again, right? If monetary printing stops, if we decide to go into a, depression, an order of magnitude of the 1930s, and we actually pay off our debts, and the dollar becomes a virtuous currency, that's the threat to Bitcoin. I just don't think it's going to happen. And therefore, Bitcoin I view as an asset that is uncorrelated to the US dollar, but it's not a derivative of the US dollar, just like a stock. A stock is a derivative of the US dollar because, you get revenue in and then you make money off of that revenue, so you're a derivative. And unlike bonds, which is what I love, is it has no counterparty risk, right? Bonds, the company you buy bonds from could always go out of business and not pay you. And of course, most people who buy bonds, they buy bond funds. And so when you buy a bond funds, you have tens and tens of thousands of bonds in one fund, such that if a company goes out of business, you don't feel it, but you nonetheless feel it in your return, right? You have lower return. Counterparty risk exists with bonds. Bitcoin is a one-sided ownership. There is nobody telling you, oh, we aren't going to give it back to you. No, it's the algorithm that tells you, yes, this string of 12 walls in that person's head corresponds to X amount of Bitcoin, and thus it is schmuck insurance. In case, this is a funny way to say this, schmuck insurance. This is from Shamat Palihapitiya, by the way. It's not from me. I wish it was, but if it's some schmuck insurance, in case the US dollar becomes like the Bolivar. And I don't mean to pick on Venezuela, but it could be the Argentinian peso. It could be Turkish lira. So many, it's unfortunate that there are so many currency one could pick from, and that's just the modern day currencies. If you pick currencies from prior centuries, you could pick just about any country that was in power, and you would find a currency that became worthless. The Weimar Republic mark is the one that comes to mind here, but there's been so many more. In France, you had the Assinia, who became worthless. There were so many more. So that's the whole story. That's the whole story of currencies which were great in their day, just like the US is great today. And if the US dollar were to have issues with the value of the dollar, you could have schmuck insurance. So that's why I own Bitcoin, and I think Bitcoin is a great alternative to bonds, and it's in my view an uncorrelated assets. And MicroStrategy, a lot of people enjoy owning Bitcoin in brokerage account, and there's a way to get exposure to Bitcoin through a stock. The one I pick for this example is MicroStrategy. That's one I pick for my own exposure. Outside of pure form, I picked MicroStrategy because I think MicroStrategy is a sound company. But then again, there's many different ways to do it. So this was it. This was my 10 stocks, the best stocks, those that I consider my favorite stocks in my portfolio and my biggest positions in my portfolio. I really hope you enjoyed this entertainment-only video. Entertainment only. I hope you were entertained. This is not investment advice. I'm sorry if I'm making a little less videos right now. I am with family, visiting family out here in Europe, but I'll be back in the US shortly. Thank you so much for liking. Thank you for subscribing. Thank you for your time. Have a wonderful day. Wonderful day. Bye.